In bustling Babylon, merchants enter a grand temple, where priests record grain deposits on clay tablets. Farmers store surplus crops, withdrawing when needed. This early banking system lays the foundation for wealth management, allowing trade and commerce to flourish in ancient civilizations. At a lively Greek agora, money changers sit behind stone tables, exchanging coins from distant lands. In Rome, wealthy patricians deposit gold with private lenders who issue loans and charge interest. These early banks fuel commerce, supporting vast empires and cross-border trade. As Europe emerges from the Dark Ages, traveling merchants rely on Jewish and Lombard moneylenders for loans. The Catholic Church frowns upon charging interest, but underground banking persists. Gold and silver move discreetly across kingdoms, financing trade despite religious restrictions. In Florence, the Medici family revolutionizes banking, introducing double-entry bookkeeping and credit systems. Their grand halls welcome merchants, nobles, and even the Pope. With letters of credit replacing risky cash transport, international trade flourishes, shaping the future of finance. In 1694, the Bank of England is founded to stabilize the British economy, issuing standardized banknotes. Governments realize the power of central banks in controlling inflation and funding wars. Other nations follow suit, marking the beginning of government-backed financial institutions. Steam engines power factories, and railroads crisscross continents, driving demand for capital. Banks expand, offering savings accounts and business loans. Entrepreneurs flock to financial districts, securing funds to build industries that transform economies, fueling unprecedented economic growth. Nations peg their currencies to gold, ensuring stable trade. Bankers in London, New York, and Paris oversee vast transactions, linking economies like never before. But as economies grow, the rigid gold standard struggles to keep pace, setting the stage for financial upheaval. Wall Street crashes, triggering global panic as banks collapse overnight. Families lose savings, businesses fail, and trust in financial institutions shatters. Governments intervene, creating regulations like the FDIC in the U.S., ensuring deposits and preventing future financial catastrophes. After World War II, economies soar. Banks introduce credit cards, mortgage lending, and personal loans, making money more accessible than ever. Suburban families buy homes and cars on credit, while businesses expand, ushering in an era of unprecedented consumer-driven prosperity. A businessman in the 1970s inserts a plastic card into a brand new ATM, withdrawing cash without waiting in line. Meanwhile, computers begin replacing ledgers, and electronic fund transfers make banking more efficient. The digital revolution is underway, paving the way for faster transactions. With the rise of the internet, people log into online banking portals, checking balances and transferring money from home. E-commerce booms as PayPal and online payment systems emerge. Physical bank visits decline, and financial services become more accessible to the global population. Smartphones transform banking, putting financial services at people's fingertips. Apps allow instant transactions, stock trading, and peer-to-peer payments. Fintech startups challenge traditional banks, offering faster and cheaper alternatives, forcing the financial industry to innovate rapidly. A new digital gold rush begins as Bitcoin, Ethereum, and blockchain technology disrupt banking. Decentralized finance, DeFi, removes intermediaries, allowing users to lend, borrow, and invest without traditional banks. Banks evolve into AI-powered institutions, offering instant loans and fraud detection through algorithms. Cash becomes obsolete as digital wallets dominate. With biometric security and blockchain integration, transactions are faster and safer than ever, reshaping the global financial landscape. In a futuristic city, a person pays for coffee with a retinal scan linked to a global digital currency. AI advisors manage investments, and banking becomes seamless across borders. Yet, as technology advances, the core of banking remains trust, security, and the power to shape economies.